Well, the U.S.-China trade dispute continues to escalate. China may walk away from a White House invitation to hold new talks now that President Trump reportedly may announce $200 billion in additional tariffs on Chinese imports. And that announcement might be today. Let's bring in Mark Avalone at Potomac Wealth Advisors. Good morning, Mark.
Good morning.
$200 billion. I mean, this is going to have a wide-ranging effect. Remember, several business groups had been to Washington, those open hearings that we had, and so many companies, they lined up to say this is going to hurt our business, drive up prices. We may not be able to hire. The president, though, is still going ahead. What do you make of that?
Well, I think they're right. The tariffs aren't really a friend to American businesses for the most part. The president has put a stake in the ground, however, as have the Chinese, and that's the concern, that the two are locking horns and no one's going to want to blink publicly. We keep hearing, will China blink? They're not going to blink, and that is why it's very important that these talks happen diplomatically, a little below the surface, because neither side's going to publicly blink. And if that continues, that's what concerns the market. The underpinnings for the stock market are so strong. We see the overhang. It's largely the trade and tariff dispute.
You know, this is certainly, if these tariffs go into effect, it's likely going to be, according to the Journal, before the November midterms. Devin Nunes was on with Marie Bartiromo yesterday, and he made some very specific and heated points about how he feels with regards to China. Listen.
If the Chinese don't come to the table and, number one, stop stealing our intellectual property, number two, stop dumping products on the market, I don't think we have a choice because if we really wait too long, our military is not going to be able to go up against the Chinese in parts of the globe.
I think that last part of his statement, Mark, was really interesting. What did you make of that?
Well, military confrontation should be discussed as beyond the last resort. These are two very strong nations. I don't know what positive outcome could happen from that. I think his other point, though, about the intellectual property dispute is really on point, and why this is a legitimate dispute, why President Trump has the support of the business community in this regard. So taking them on now before they're too strong while we still have leverage, I get all that. What we need to do, though, is do it in a more diplomatic way. The U.S. economy can win a trade war, if there is such a thing as winning a trade war, but It would be long, it would be prolonged, and it's not in the interest of the consumers or business.
You know, and we've heard many people come on and say that, certainly, but at the same time, we're not yet really seeing a big market reaction. You know, even with further reporting over the weekend from the Wall Street Journal, from Fox's John Roberts, that this is going to happen. We still have futures which are, I mean, fairly flat. We're red, but we're not completely flat. I mean, we're not, you know, looking at some kind of big sell-off this morning. What do you make of that, the investor reaction?
I think the investor reaction is more what hasn't happened. What would the stock market be if we didn't have tariff talk every day? Look, every time we get a bit of good tariff news, we see an uptick in the stock market. So I think testing it against this null hypothesis is difficult. I think the investment community is on pause because uncertainty is never a friend to the investor. Stock investors don't like uncertainty. And this is more of an overhang at this point. We don't know which way it could go. If it clears up, I think the market takes off. If it gets worse, I think we continue to languish from here.
And we're pausing until we decide to hit the buy or the sell button. Kind of hope
exactly.
Mark Avalone. Mark, it's great to have you here this morning. Thank you, Mark.
Pleasure.